Hi everyone. Today let's talk about the weirdest 6 months in the markets that I think we've seen here outside of maybe COVID. And then of course we'll get into all of the normal charts and data that we're looking at for the upcoming trading week. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So it's been a weird 6 months in markets. Let's take a look at what they have to say here. They say resilient portfolios have low or negative correlations to each other with the intrinsic ability to outperform cash. So we've been talking about that on the channel for seemingly forever. I've been saying it a long time. Easy rider portfolio, we've talked about it. Cheap and efficient ways to get into yielding assets. We've been talking about bonds. We've been talking about REITs on the channel. Hopefully you've taken advantage of some of the opportunities that we've talked about in those names. You got JP Morgan saying that US, European, and Japanese stocks could reach higher highs over the next 12 months, with certain assets like bonds and gold likely to produce uncorrelated returns. So they still think markets could go higher there. Crypto might find a place into your portfolio. I have been not a huge supporter of crypto. If you like it, cool. If you don't like it, cool. I don't have any money in it personally. But what we've been talking about, international stocks have charged ahead over the last 6 months. There's just not a lot of money allocated to international stocks. US exceptionalism has outperformed massively over the last several years, and there's a ton of money already in those stocks. The stocks are already expensive, in my opinion, versus Spain gaining 20%, Germany 18%, the Hang Seng also up 18%. Japan did start to cool here a little bit, down 4%, while both the S&Ps and the negatives posted very, very small gains. We did have a massive negative move. Now we're very slightly positive on the year. Commodities have been pretty sparkly. We've been talking about gold. We'll take a look at gold later on the charts. Both of these have had really nice runs, 28 and 21% here for copper. But then you have other commodities that have struggled, down 20% here for oil. Maybe that's doing a little bit better now with all of the geopolitical risk and conflicts we're seeing around the world, but something to consider there. And then you got treasuries continuing to deliver those slow and steady low returns. Bitcoin rallied about 12%, pretty small move there for Bitcoin. Will it be able to continue to go higher? That still remains to be seen. US and international bond ETFs, you can see very, very good here for those international bonds. US bonds, not so much, right? IEF, LQD, we watch junk on this channel. Even TLT has underperformed here recently, but I do believe these will start to catch up here at least a little bit. And you can see here JP Morgan Chase saying that there are better days ahead. The banking unit saying that high net worth clients are predicting higher highs. So if they are looking for higher highs, then they are probably buying in, which eventually will mean higher highs for these stocks. I don't really agree with that necessarily. I just don't see the kind of growth that we would need to justify higher valuations, but it's not impossible. So something to consider there. We also have cash continuing to depreciate at 1 to 2% annually. So do consider that currency risk. At least have your money in high yield savings to help defend against that inflation risk. Increasing your exposure away from the US dollar and US stocks right now makes sense to me. That's why I've been advocating for bonds, real estate, things that are going to continue to do well in this kind of an environment. And where do you have these experts putting their money? You have the Easy Rider portfolio, Momentum Rider portfolio. We've talked about those many times on the channel. Looking for the sectors that have the best opportunity in the short term. Easy Rider has more safer assets, kind of like gold and bonds in here. So what did they suggest? Look for those long-term potentials. Infrastructure could be an opportunity, kind of that real estate side. They also mentioned structured notes and hedge funds. I would say this is more along the lines of private credit. There is some private credit availability out there. And of course, digital currency, if you like that. Obviously, this is a higher risk, but could be a nice addition to your portfolio. And in their opinion, risk assets like stocks are likely to sell off. Bitcoin will likely sell off with it as a correlated asset. So you need to find things that are uncorrelated, things more along the lines of bonds and gold. And at these levels, I think those are both opportunities. Looking at fear and greed, we finished the week at a 55, down from a 60. Very slight declines. Continues to look like a topping pattern, but strength did kind of tick up a little bit towards the end of the week. Breadth continues to falter here as we continue lower. Still in extreme greed though, so plenty of room for that to continue lower. Put call ratio elevating slightly. We're off of that low now. Looks like a nice double bottom. Looks like that's going to go a little bit higher there. VIX also trending slightly higher, while you got that 50-day EMA continuing to downtrend. This is probably falling off here now. So we're starting to see this push through there. I think it'll go. And then looking at safe haven demand, still finding support at that 0 level, and then junk bonds basically unchanged for the week. Moving over to the AAII survey, you can see the bears did come in a little bit more this week. The bulls squeezing back down to a 33. Neutral getting squeezed as well. Bears back to the 41.4 that we saw 2 weeks ago. So got a slight step down, gave us enough room to kind of pull back a little bit. We'll see. The bears are a little bit higher than I would like to see them if we were going to move lower in a more aggressive fashion, but I think we're kind of in that slightly below historical averages on the bull side, so there should be some room to the downside. Maybe it's not as aggressive as that last iteration. Moving over to seasonality here, you can see we still have a little bit more room till the lows of the month around the 24th, 25th, and then we'll see if we get it either flatlining into the end of the month or a slight reprieve, slight uptrend, but for now, this slow grinding downtrend is what we're getting, and that does fit with seasonality. And then looking at the calendar here, you can see basically nothing for the Monday. Week after quad witching is down 29 of the last 35, down about 0.8, so pretty bearish metric there. Bearish for the Tuesday, consumer confidence, new home sales for the Wednesday, durable goods, and final GDP Q1. For the Thursday, that'll likely be the biggest one, and then we get PCE to finish out the week. Slightly bullish finish into the end of the week. Moving over to the economic calendar, you can see basically nothing here. For the Monday, you do get existing home sales, like I mentioned before. And then looking at the Tuesday to your note auction, continue to watch that. Fed Powell speaking at 10 o'clock, that'll be interesting. Wouldn't expect too much more than what we got in the FOMC, but always interesting to see what he has to say. Consumer confidence there as well. And then for the Wednesday, new home sales, Fed Powell speaking again, must be one of those conferences. And then PCE data here for the Thursday, core PCE prices, core durable goods. Want to see that come in a little bit better than it has been. And then looking at 7-year note auction, that continues to sit well above the 4 level. We'll see if that happens again. And then those actual PCE numbers, core and headline. This is the Fed's preferred inflation metric, so we'll continue to watch this closely. Does this come in a little bit light? It's right now at 2.5, which I would consider to be pretty good. We got the headline number at 2.1, so inflation is pretty low, but they did continue to say they think that we're going to get an inflation spike at some point over the next couple of months, which is currently what's holding them at a higher interest rate, in my opinion. Moving over to Max Payne, this is obviously not a third week options expiration, but let's take a quick look at it. Total options 348,000, put call ratio pretty low there to 1.59, and then you can see put walls here 595, 590, calls and puts here at 600. Really, this could go either way, somewhere between 590 and 610 kind of makes sense for me, but I still think we're going to go a little bit lower. Probably not below 579 though. Moving over to the SPY charts here, you can see for the week we were down 0.16. That's 2 bearish weeks in a row, continuing to throw wicks to this zone of resistance, highly traded zone there as well. Lots of volume at that level. Can't seem to hold above that 597.63 level. The next one 591.09, and then your next dynamic support is going to be all the way down at 580.13. I do think we're going to see a bigger pullback to that level. This kind of zone right here between 572 and this kind of 577 area makes sense for me. Momentum is still bullish, so we're not really moving down quite yet. If we get a nice step down, we might see that swing to bearish momentum next week. That could be interesting. And then looking at that daily chart, we've been watching this all week, of course. Back into bearish momentum, bearish RSI, a little bit of a volume move there on the Friday. 21 EMA is that major support. And then if that does go, then we are headed right back into that zone that we talked about, kind of 577 area. Does seem like the next zone of support where you would have some buyers trying to come in and defend that area. Moving over to the Tasty charts here on the weekly, you can see we did get through that trailing stop the last 2 weeks, but we are now right at that level. 594.85 was the level. We closed at 594.24, so we're back below it. 8 EMA is your support around 585 on the weekly chart. Again, it seems like we're going to pull back into that area. A little bit of volume coming through over the last 2 weeks. Not a whole lot. Momentum is still a little bit bullish here. You're still in bullish conditions, obviously, with that trailing stop getting taken out. That's not always the hardest level to get through, but it seems like we're back below it. Is this kind of a rejection from that area with just a little bit bigger push through it? That's what we're waiting to see here. And now you can see 21 EMA on the daily chart. We're right there. Same as what we saw on the trading view charts. Your trailing stop right now, 584 583, so a little bit higher than that 577 area. If we were to get there, that would take you all the way down to that 55 EMA there, and then the 89 EMA is right there, 578.28. So you got a couple of zones of support right here, 585, 586, and then this kind of 577, 578 zone. Moving over to the NASDAQ here on the weekly chart, you can see down just 0.2, not a whole lot on this major index. Again, 9 EMA sitting all the way down there at 20,922. Plenty of room if we did get that pullback to that level. That's about 3% lower from current price. I do believe that's going to happen, and you can see the momentum here also stepping down. Didn't see that on the SPY chart, but we did see it here on the NASDAQ. I would expect some follow through off of that. And then if we did get that continuation to the trend line, that would be around this kind of 20,840 area. And then looking at that daily chart we've been watching all week, that Friday session was a nice down week. The 21 EMA again continues to be your support there, 525.07. If that zone breaks, then you have a lot of room down to that 144, about 4%, pretty much in line with what we were talking about, 509.74, and then my next level 498.96. So we're watching this one closely, 523. If this goes, I think there's a lot of room to the downside. If it continues to hold support, then we could be rocketing back to new all-time highs. So very, very important level over the next week. Moving over to the NASDAQ here on the Tasty charts, still basically flat for that week. The 8 EMA there at 513.42, still looking for that zone of support. I think we're going to get a test of that level, which is a pretty substantial move down. That is about $13 lower from current price. Not a ton of volume on the last week, but I think we've been consolidating for 3 weeks in this area. Expecting a little bit of a pullback makes sense to me. Trailing stop right now, still 460.52, so lots and lots of room to fall before we get into bearish conditions. I don't necessarily believe that's going to happen, but it wouldn't surprise me if we did pull back into that area. And then looking at the daily chart here, you can see that fall on the Friday session, well below the 8 EMA. Closed below it the last 3 days, expecting this to pull back a little bit. Trailing stop right now, 512.69, pretty much in line with that 513 area. 512 all the way up to around kind of 515 makes sense as a zone of support, but either way, falling into that area is a substantial move lower from current price. Moving over to the Russell managed to stay positive on the day, up 0.15 on the week, still holding that 208.22 level, still well off of that 9 and 21 EMAs. That's closer to the 205 level there, 205.07, the trend line in there as well, around 205.55. Momentum still bullish, RSI still bullish. Been liking the Russell here a little bit more than the other major indices. Seems like tech is starting to fade a little bit, and the Russell being not as affected by that has allowed the Russell to outperform a little bit this week. So still like this structure, 208 support. If it falls to 205, I'm going to like it a little bit more. Realistically, the best support in here is going to be somewhere around 196 to 198. If it comes in here and finds a higher low structure from here, I would suspect that we're going to head back towards this kind of 220 area, 230 area, back towards this high from January of 25. So I still like this structure overall, and the Russell seems to be one of the better places to be, at least for now. And then looking at that daily chart, it did try to go a little bit higher on the Friday. Momentum still a little bit bearish, RSI still a little bit bearish. Same kind of setup there on the 21 EMA. Could not get above this 9 EMA, so that is still your resistance there at 211.26, level there to 11.88. So again, it'll probably still fall, but I think it will outperform. Moving over to the Russell for the Tasty charts here, you can see we're in the same price action that we were in March of 24. So this is flat now from more than a year ago. We are into this zone here, still very much bearish conditions. Your trailing stop on the weeklies all the way up at 223.09. Do we hold this zone and then rally back up to there? I would say probably not. I think we probably have a pullback first. Even if we did get up into that zone eventually, still bullish conditions on the daily chart. We did close below that 8 EMA. You can see this consolidation that we've been watching. Still holding above that 144, 208.87. That was the zone that we were watching. At that level, you can see a little bit of volume coming through on that selling action. Tried to go higher, hasn't been able to do it over the last couple days, but it did hold support. Right now, your trailing stop on the daily is 204.98, or in that 205 area. Again, if we pull back into that zone, I would suspect there would be some buyers in there, but your ultimate lowest band there is all the way down at 198.82, which is that kind of zone of support area that we talked about on the previous charts. Moving over to the Dow here on the weekly, basically unchanged from the previous week, which was a pretty big down week, 1.3% unchanged here this week. Still believing that 418.38 is going to be your support. You got the 9 EMA, 21 EMA, everything in this area is going to be a zone of support, which means we're probably going to magnetize to that area. Momentum should step down next week, RSI pulling back towards that SMA, and then we'll see if that is support or not. Either way, I still expect this to pull back into this region here. Moving over to the equal weighted S&Ps, basically unchanged, kind of a blend here between the Dow and the Russell, still finding support 177.25. The next zone of support is going to be that 175.38 area, right in line with that 9 EMA. You also got the 55 there, 21, all in this same kind of zone between 174 and 175. I would expect some buyers to come in. If we did pull back there, you can see the last couple times we came into that area, we did try to go higher here, came back, retested, found support, came back, retested, found support. Do we come back here again and find support? I would guess so, but we are still finding resistance here at this highly traded zone. You can see it through here. Lots of selling every time this zone breaks. We do tend to go a little bit lower, so we'll see. Is this the time where we push through there? Remains to be seen, but I do believe we're going to test that one more time this next week. Moving over to the SPY Russell and the NASDAQ SPY here, you can see the Russell did outperform. This did pull back a little bit as we kind of suspected that it would. Momentum bearish, RSI still bearish there, so still looking for some Russell outperformance there. And then you can see the NASDAQ continuing to chop right on top of this trend line here, and a very important trend line. Continues to sit on top of it. Momentum fading, RSI fading. Tech sector not really leading us higher, expecting this to pull back here over the next week or 2 weeks, and then eventually falling back down to 3.55. And if tech is not leading us higher, I suspect that markets are not going to go higher. Moving over to SPY divided by M2, you can see we are still sitting on that 27.25 level. Still believe it's going to pull back into this kind of range here around 26.5 and 26.6 or so. Either way, momentum fading, RSI fading. Do believe it's going to pull back. Next level is 25.91. You can see that's been an important level. Pulled back right to it here. Consolidated for a little bit before falling again. Came to it. Doji candle right on the level before continuing higher. It's an important level, and I do believe that we are going to break back below 27.25 and push towards 25.91. Momentum was flat from the last week, not enough to see a step down, but I do believe we'll get that step down this next week. Does it go there in 1 week? It's not impossible. We've seen it here before. We did get a gap and run to the next level and then consolidated here for basically a month and a half. But does it fall in one? I would say probably not. I think we probably get a step to here and then a continuation to that level. Moving over to the Mag 7. Mag 7 finished negative on the week. First negative week in about a month. You can see 3 weeks in a row of bullish. Did get above that 315 level, and now we are back below it here at the close. Momentum, again, basically flat here. Not quite flat, but basically there. Does this pull back to that next level, 305.25? Is this a high, lower high structure here? That is very much the concern. Can we get a bounce from here? Absolutely. We've seen this before. We have kind of a consolidation. You still hold in here for a long time before you get that bigger move down, but this could absolutely be a candle like this where you just stack candles and then get a continuation lower. Absolutely possible as well. That is what we're trying to figure out. I still believe we're going to go lower ultimately. Is it within the next week? That remains to be seen. Again, 305.25 is the next level of support. You also have some trend support in here around 303. Let's go ahead and extend this out here. If this zone breaks, you got a kind of consolidation here around 290 that I would be watching. Kind of watch this fall here as these consolidate around this area here. Moving over to Apple and Microsoft. Apple did bounce on the week about 2%, continues to find support in this 193 to 196 area. And sure enough, it did once again. Momentum still swinging to bullish here. RSI did find a little bit of a bounce. You can see kind of a breakout retest continuation style move there on the SMA. Apple kind of looks okay. I really still don't like this company, just on a future perspective. I don't really see Apple doing anything that's going to continue to grow here. They've stalled out on growth. They have a ton of cash, totally understand that. They have a ton of very loyal subscribers and very good margins, but you really have to grow to improve that valuation, and I just don't see that happening. So if you want to trade it short term, I could see why you would. Just make sure you keep a tight stop here. Support for me, 199.54. Can we push to 207? I think that's possible, but I would suggest you kind of sell in this 207 to 211 area. That is where we have found resistance every time. You got some trend resistance in there as well. And then you got Microsoft continuing to go up every single week. It did pull back a little bit on the Friday, kind of along with everything else. Momentum stepping to bearish there just a smidgen, but still very, very powerful. Wouldn't suspect that this is going to crater by any means. Moving over to Tesla and NVIDIA. Tesla was down on the week about 1%. Still cannot seem to find any clear direction. Had a nice bounce here, up about 10%, and then we pulled back after trying to go a smidgen higher. Didn't quite get it done there. So you still have a kind of high, lower, high structure here, and then you have a bit of a low, higher, low structure here. So is this just going to kind of consolidate and drift back towards this 293 to 313 area? I would say that's probably your most likely scenario, and then we're going to see what happens. Does this ultimately break one way or the other? Obviously, we don't know that yet. For me, this is a triangle pattern, and we don't have clear direction. And then looking at NVIDIA, also stalling out similar to Microsoft, just off of these highs here. Momentum basically flat. RSI still a little bit bullish, still holding that 140.76 area, but was only up $1.88 this week. Can't seem to get back to this all-time high or even that next level there, 149.65. So can it get there? Absolutely. Is it slowing down? Also, yes. Moving over to Amazon and Alphabet. Amazon falling another 1% this week. It was down 0.69 or almost 1%, and then a little bit more than 1%. So about 2% between the 2 weeks. Momentum flat, RSI still pulling back, volume coming in here back below that 212.25 level. Does this pull back into the kind of 202 to 200 level? In here, I think that's likely. And then looking at Alphabet, a terrible week for them, 4.63% on the week. This was a zone of resistance. Structurally, this still looks like a head and shoulders to me with a left shoulder head, right shoulder here. And now you got a wick rejection and a confirmation candle down. Does this break structure here and head back down to kind of 143.82? I think that is absolutely a possibility. The neckline's closer to that 150 area. Momentum stepping to bearish, huge volume coming through there on Alphabet. This looks like it's set to go quite a bit lower. And if both these fall together, that is a big part of the Mag 7. So you got a couple of players looking quite a bit weaker here as we head into this next week of trading. Moving over to Meta and Broadcom. Meta was basically unchanged on the week, but you still have this kind of high, lower high structure here. 2 bearish candles in a row, just barely. Momentum, basically flat. RSI, same kind of setup. So again, does this start to pull back? This has been one of the best performers here in the Mag 7. It's been straight up for a while, and now it seems like this is going to kind of pull back here. You got high, lower, high. With a low, do you get a lower low potentially, or maybe a double bottom in here? Even if you got a higher low structure somewhere in here between kind of 593 and 564, that's still a lot of downside from current price, about 20% lower. So just keep that in mind. The risk is to the downside. Again, not suspecting that it's going to happen all in one move, but I would guess there were a lot of traders that thought this was going to continue to run, and then we pulled back about 30% from that high. So pretty substantial move. Absolutely could do another move like that. And then you got Broadcom right at these previous highs through a bunch of wicks. Couldn't really close above these highs very well. We were right at them this week. So you did get a new all-time high, but you didn't really get a new all-time high close off of these levels. Momentum flat, RSI seems like it's about to pull back a little bit. Again, even if we just pulled back, still holding the structure, it's really extended off of that 9 EMA. That would pull you back about 8 3/4, almost 9% there. So just consider that move potentially to the downside. And then if that does happen and we don't find support, could be like this, where you get that kind of 9% pullback, and then does it result in kind of a 40% pullback? I think that's unlikely, but not impossible. Moving over to staples and discretionaries, you got staples slightly positive, hanging in there really, really strong. Momentum bearish, RSI is still bearish, but structurally still hanging out. We've been here for a long time. If you're buying this, I don't really think you are trying to put money to work. You're just trying to keep money safer. Versus discretionaries has had a very long topping pattern after this gap up. 210 continues to hold. Does that break this week? Momentum stepping to bearish, RSI stepping to bearish. If it goes, 203 is my next level. I do think that there is a strong potential that we get this gap fill over the next week or 2 weeks, which again, structurally, that is a big high, lower high structure. You already had kind of a topping pattern in here, bigger pullback. Does this result in a kind of broader downtrend? This is very important here, and if it does, then you're looking for a bigger move down, potentially double bottom all the way back down at 177. Moving over to real estate and gold here. Real estate did have a little bit of a down week. We're in the sell zone, kind of hold to sell zone. Above 42.84 is definitely sell. You can see last time we touched it, big rejection from there. Went way, way lower. Got a nice buying opportunity in here around 35 to 37. If we get into this zone, absolutely buy it. But for now, looking for a little bit of a pull pull back down to the 40 range. Again, below 40 to 37 is kind of a medium buy for me. Below 37 is absolutely buy it pretty much as fast as you can. You can see how much volume came in at these levels. Definitely a lot of players watching real estate in this zone, and I do believe we are going to see a little bit of a sell here. Will it be like this? I don't know, but if you can get an opportunity, definitely buy it up. And then gold. This looks like a topping pattern. You had kind of a bull flag here, and you did get a little bit of a continuation, but you really couldn't get above the high from that 21 April here. Structurally, obviously, still very, very bullish. Momentum fading, RSI fading. Does this start to pull back here a little bit? It's obviously super extended. Gold is benefiting from this economic environment, but a lot of the technical picture here says this might pull back a little bit. So just be cautious on gold. If you dip below this 9 EMA, and especially VWAP there around this 300 area, 300 to this kind of 305 zone. If it breaks below there, I would definitely be very cautious. Moving over to breadth, 20 and 50-day breadth here. You can see breadth continues to fade, momentum fading on both of these. RSI on the 20-day is basically neutral there at the 50 mark, expecting this to continue to accelerate lower here. And then 50-day breadth, big down candle to that support level 62.25, momentum stepping to bearish. RSI still could hold support here, but I do expect it to at least pull back to this level, and then we'll see what happens after that. Does it hold a higher low structure and then bounce, or does it cut through there because it has been such a powerful run, hold a higher low on the actual price action here, and then see what happens after that? That is what we are looking to see. But either way, short term looking a little bit bearish, medium term I think could go either way. Moving over to 50-day breadth, this is quite a bit more ominous here, down 4.85% coming off of this structure. Continued to fade here. We're right at the 21 and 9 EMAs there at 45.24. Did close below at 45.12. Next level 42.26. Does it cut through there? Momentum bearish. RSI, same kind of setup as the 50-day. Does it come to here, hold support and bounce, or is it going to cut through it? Again, we don't know for sure, but structurally this has continued to fade. You had a big acceleration obviously on the tariff news. Pretty solid bounce, really only to the midline here. Does this fall back down and give you a kind of double bottom in here between 18 and 19, or do you hold a little bit better support around this kind of 24 to 29 area? That is what we were waiting to see. If it holds a higher low structure, maybe we are in better position. If it comes down in double bottoms, I would suspect price action is going to go quite a bit lower. Moving over to the dollar here on the weekly, the dollar did have a little bit of a bounce. We've been relatively bullish here on the dollar. We had clear divergence with a low coming in here mid-April. Lower price action, same RSI read, divergence, nice move up here. Still need to see this get above this kind of 99.8 area. That's what I'm looking for. Does it push through here? Structurally, obviously still very much bearish, just feels extended in the short term. So would look for a little bit of a rally, lower high setup continuation based on the structure, but you can also see that we have been in this same price action since back here, February of 22, really high moves, long consolidation. Does the dollar actually continue higher from here? Sure, it absolutely could, but I think you could make a pretty good argument that this just continues to go sideways choppy in this zone as well, especially if we do get that interest rate cut. And then if those tariffs get back on, which are definitely coming up next month, then this could continue to sideways chop in here or potentially get worse. Moving over to the bonds here, J&K and TLT, both up on the week, 0.5 and 0.19%. Momentum still bullish here, RSI still bullish, breaking out finally above that 200. We did have a fake out breakout here, 24 Feb, but it seems like this is finally getting ready to go here to that 96.50 level, head back towards 97.69 in a much more bullish structure. You had a very long consolidation, nice move up, tried to go higher, couldn't do it, retested. Nice buying opportunity here. We did talk about it, bought quite a bit of bonds, and now we've rallied back through. Still believe this is going to go bullish here. We're above all the EMAs and SMAs. Looking at TLT, this still has a long consolidation to go. This is part of why I think we haven't quite gone higher yet. It's just waiting for these technicals to catch up. The short-term ones have caught up. The long-term ones still all the way up here at 105.48. I still believe we're going to go there at some point. Still believe this will go to 100, especially over the next 6 months or so once we start to get a little bit more clarity on the geopolitical risk along with the FOMC, inflation risk, all of that stuff should come in over the next 6 months. And then once that happens, I do believe bonds will start to get bought up a little bit more powerfully. Momentum still stepping to bullish. RSI, this is the concern, right? Does it get through this SMA? Last time we tested it, we rejected. Do we get through here and push on this next one? I do believe that we will. And you can see last time we had a ton of volume. It was selling volume, but we really haven't gone much lower from that level. Anything below 85.90 is a buying opportunity, and we are basically right there, and I have been buying over the last couple weeks. Moving over to the VIX, basically unchanged on the week, down just 0.2. Momentum still swings to bullish. RSI basically unchanged, still well below the SMA here. Does this kind of need to consolidate a little bit more? You had kind of a double bottom, interesting structure there. Could go either way. I still think this is a base looking for a push to this 28 area. I've been looking for that for a while. Had a nice move last week. Didn't really get the continuation I thought we might this week. Maybe that was because of all the options in that quad witching, and now we get the acceleration post quad witching, post FOMC. But either way, we're still above some of these support areas, but below these resistance areas here around the 28 to 33 area. And then finishing up here with my accounts, I ended up netting out about $270 on the week. So nice little week there, especially when markets are down. You love to see it. Traded a little bit of bullish Russell. That worked out fine. And still sitting on these calls here, the 515 calls. A little bit of a profit right now. Still expecting markets to go lower next week. So that is what we're looking at. Have a little bit of flexibility now that we're at 41 days. I could roll out one iteration, but I still believe we're going to go lower. So I want to sit on these as best I can, especially if we were able to get out of the money here. That would be awesome. Would expect a nice move there. So that's what we're looking for. Still bearish on the next week, just sitting on these pretty deep in the money calls with plenty of credit left on them, with $1,700 credit out of the potential, with $1,100 credit out of the potential $6,000 available. Let me know down in the comment section where you are putting money right now. Is this the place to be buying stocks? Will we actually go to higher highs? Or are you looking for non-correlated assets, things with yield the way that I am? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.